people don't understand what trading is. They don't get what they're actually doing. They don't understand why they're compensated for participating in the market.
This trade deal for the UK is not particularly favourable to the UK, right? In fact, it's awful for the UK mainly.
But the US tariffs on aggregate now are 1.8%. They were about 5.3% before. For the UK, they've gone from 3.4% up to 10.8%. How is that a win?
Hello and welcome to the Market Edge podcast. This week it's Trump versus gold. Has Trumponomics taken the shine off of the world's most popular precious metal?
Yep, everyone has loved this safe haven trade, but if things are going kind of okay again, does it mean that the safe haven trade is actually done? We're going to take a look.
In recent months, the gold bugs have seen the precious metal fly. Gold's been flying higher, but is that just going to be a fleeting fly higher? We'll analyse how Trump's tariff phase 2 is affecting gold.
Yep, we're going to take you through the smart ways to play Trump's tariffs and any kind of trade conflict going forward. But let's start off by saying that we kind of think that it might be finished.
Do us a favour, like, subscribe, whatever the buttons down the bottom are, click them so you can get new episodes of the Market Edge podcast every 2 weeks. But David, let's start off with Meme of the Week. So, Meme of the Week, I mean, we could have chosen loads of these. I mean, yeah. AI and Grok on X is, making life a lot easier for
rampant.
People. Rampant.
Everywhere.
Everywhere. It's all over the place. And this one is from some random guy who's tweeted. It says, breaking, Trump caved. Big time. The US has dropped the tariffs on China from 145% to 25%. And we've got Trump and Xi Jinping at a casino table. Xi Jinping with all the chips. Has he caved? Has he? No, or is this exactly what... Is this playing out exactly how he expected?
It's why I love Twitter, because there's so many stupid people on there.
Yeah.
So like,
because it's full of utter rubbish.
I mean, it's sheer anchoring bias, right? If anyone's conducted
anchoring bias, I mean, look, he pulls out.
I pull them out of everywhere,
again,
don't I?
First,
Mate, away. I told you about my 340-yard drive. I shouldn't even.
Yeah, no one believes that though.
I sent you a photo.
Yeah.
Anyway, yeah, let's get on about it. So, in my view, the anchoring bias is that, look, he's going to talk it all the way up to a crazy level, and then any reduction is then going to be seen as an improvement. If anyone's ever done sales, you can go, or if you've ever looked at a website, they normally have 3 different offers, right? They normally have a high offer, a middle offer, and a low offer. You kind of anchor to the highest offer so that the middle offer looks really, really good. Yeah. It's exactly what Trump's done.
I mean, I kind of like this situation because it's almost like tariff phase 1 was go in, piss everybody off, get the markets crazy, make sure we've got all the sorts of craziness going on. That's phase 1. And then when all of these economies that have been struggling anyway are now going, look, come on, please chill out. These markets are all over the place. We need a bit of stability. He goes, okay, fine, let's do a trade deal. And then you get this situation where everybody's coming, especially the UK, coming cap in hand, going, oh, we'll do a trade deal, Mr. Trump. And this is what he wants, right? He wants trade deals that are leaning towards the US, better for the US than they are for the other country, to stop any of the issues going on. And that's exactly what's happening, right?
Pretty much, yeah. I think, the original tariffs were what, like... Was it 10% on China, something like that? I don't know. I honestly don't know the aggregate number. But 25% is higher than what they were originally. So if we're seeing a reduction from 145 to 25%, it's not that there's a reduction because there was no...
there was no tariff
145%. It was just an idea.
Yeah.
So then what the actuality is what, double and a little bit of the original, which is what people just don't realise. And they're saying that he's caved. Are you...
Yeah, exactly. This takes us on to the tweet of the week because again we've got a similar situation here. the viewpoint from a lot of places is that, well, Trump's caving in. These are stupid ideas. And this, what we've got here on the tweet of the week, it says, Trump reaches a deal to pause the tariffs imposed on China. Same situation, but the picture here is this vicious circle, right? Donald Trump, I make a stupid decision. Next one, something really bad happens. Next one, I convince my followers the problem is now magically solved. And then backed around to I reverse my stupid decision. But he's not reversed any stupid decisions. He actually hasn't put any tariffs on. Okay, since Liberation Day, markets have been crazy. But they're not necessarily down, are they? We've seen a lot of volatility, but they're not necessarily, if they are down, they're not a long way down. There wasn't even an announcement of a China-US trade deal. Mm-hmm. There was the pausing of the tariffs and the potential of something to happen. And the Dow ended up, what, 1,200? I know we're talking about the Dow again, and no one trades the Dow, but I know you don't like it either.
Boomer index.
Shaking.
Price-weighted index, ridiculous.
Yeah. Anyway, it was 1,200 points up.
Yeah, well, there you go. But look, I think, people are always going to have silly opinions on Twitter because people don't understand what trading is. They don't get what they're actually doing. They don't understand why they're compensated for participating in the market.
Yeah.
There's so many different variables that go into the market moving, whether it's, to be honest, in the short term, the biggest one is trading against positions. Where is the fuel? So what's happened as to why you see V-shaped bottoms in the market, for instance, is because the market gets positioned so heavily one way. You might see loads of shorts coming into the market, but then things are then not worsening. And so what the only option then is to relatively get long.
Yeah. And
so then you see everyone closing out their positions. Now, people are saying, oh, yeah, he's reversing this decision. It's not reversing the decision. Okay, what's happened is that he's just imposed something, but it's not as bad as it was, and then the market reacts in that way.
I just want to touch on, before we move on to our winners and losers, is only one nation do a trade deal so far, and that's the UK. This trade deal for the UK is not particularly favourable to the UK, right? In fact, it's awful for the UK mainly. Is the wide opinion is that it's pretty awful, and especially for automakers. Again, what we often sit here and bash the UK government about how such poor decision making that's going on. Keir Starmer's trying to use this as a real positive PR story, but.
Yeah, but Keir Starmer doesn't understand anything.
Oh yeah, that's probably why.
Remember what Keir Starmer is. He's a lawyer who only believes in procedure. He doesn't understand context. He doesn't understand forward looking. For Keir Starmer, things are just right as they are because they fit in within what should happen there and then. There is no forward planning with someone like Keir Starmer, which is why everyone is so furious and frustrated with him. He's very reactionary.
That's why they knew they were going to win an election for however long, and then they didn't try and plan as to what they were going to do when they actually got in power.
So the tariffs on the UK,
they were the lowest of all, right?
Yeah, but the US tariffs on aggregate now are 1.8%. They were about 5.3% before.
Yeah.
For the UK, they've gone from 3.4% up to 10.8%. How is that a win?
Good
now.
Deal.
Who it is a win for, and we'll get onto that, is probably Rolls Royce and Boeing, because there is a free trade element of jet engines being included here.
Yeah.
And obviously Boeing is the largest.
And we will get onto that. They'll be in our charts later. Won't they?
So that is a win, but again, that's a win for the US because we're effectively looking at it as being, okay, well, Boeing's been hit quite heavily. Rolls Royce has been doing fantastic. So there's no understanding of context from the British government as to how to sort of argue and negotiate for their own position because they don't understand what their own position is.
Yeah.
They don't understand what is good for the nation.
2 weeks ago, we were heavily talking about pharma. We were in on the pharmaceutical companies. We were talking about Ozempic versus Mounjaro and weight loss drugs. And you can catch last week's episode or 2 weeks' episode on wherever you're watching. Eli Lilly has actually fallen over the last couple of weeks. But, I mean, this is a long-term play. And the drug we were talking about last week isn't actually released yet, which was some of the big points that we were going to say. I mean, we still pretty much stand behind Eli Lilly as a pretty good investment going forward, right?
Yeah, absolutely. Because there's two sides to things. Not only do they make drugs for, type 2 diabetes, but they're also making the drug to cure type 2 diabetes in terms of fixing obesity.
Yeah.
So either way, they're going to make money, whether obesity increases or whether it comes off because of their own drug. Naturally, they're an American company. It's not like Novo Nordisk, where they're listed in Denmark, and then they've got a depository receipt on the NYSE. So, you know, there's nice liquidity there as well. For me, I don't want to say an obvious bet because, you can't really say that. But it's one of those companies where you look at it and say, okay, in 10 years, I can see where you'll be.
Yeah.
And you'll be even bigger than where you are now.
The title of last week's podcast was, you know, Ozempic versus Mounjaro, and actually recently we've seen there's been a bit of a study, right, that they've been looking at the two. Now Mounjaro is owned by or produced by Eli Lilly, and that came out on top, right? So we understand.
Yeah, I think as well. Novo Nordisk had seen some Wegovy sales drop too. So
Wegovy is Ozempic, right?
Yes. No. Well, it's similar. You've got Ozempic, Wegovy, and you've got Mounjaro.
Right.
But I think, you know, it's interesting considering that Novo Nordisk is trading at about a 50% discount to Eli Lilly.
Yeah.
And it's pretty much based off of that fact. I think, you know, that the sales of Wegovy have slipped in comparison to Mounjaro. I think it is because Mounjaro is slightly cheaper as well. So naturally,
I mean, you can't really look past simple economic points like this one. You know, from a layman perspective, you know, these both do the same thing. That one costs less.
Exactly.
Go on to our chart of the week, and this obviously is our main talking point for this week, and it is the gold price.
Yeah.
So our chart shows gold for the last year, pretty much been flying higher. Got a nice double top-ish around just above, what is it? Just above 3,400.
Yeah.
This whole 3,000 level's interesting with gold, isn't it? Because it doesn't seem to like it. Now, we've had this with gold for quite a few years previously with 2,000, you know, 1,000. I remember talking similar situations where it teetered around with this. Now, we're talking about this whole Trump play taking away from, does it mean gold is going to slip? Now, when there's market chaos, gold does well because it's a safe haven. Does Trump tariff phase 2, when everyone just comes in and everyone gets a trade deal and everything settles down, does that mean gold volatility or gold dramatic upside slows down?
Well, I think so. I think there's a very specific reason as to why gold's rallied, though. And it's because the Chinese anticipated the Trump regime being very much focused on trade deals and tariffs. So what we noticed was that the PBOC, the People's Bank of China, stopped buying gold in April last year. They started buying gold again in November. What happened in November? It was the election. Trump was elected, and they started adding about 2 to 3 million troy ounces per month to their gold reserves. Now, what they also did at the same time was that they didn't buy as many US agency or treasury bonds. It's not that they sold them, they just reduced their purchases of them. And so really China was effectively hedging, I think, geopolitical risk because they knew it was coming. Now, if a trade deal happens, and there's very specific components
China,
to
right?
this. Yeah, with China specifically. If a trade deal with China happens, what's then going to happen is that US trade with China is going to become more liquid again. And so whenever a trade is done, okay, for US goods, China is effectively going to be swapping yuan for dollars. China then holds those dollars, and what happens? They go and use those dollars to buy treasuries so that they can earn yield on their dollar holdings. That's how they do it. They can then swap dollars and treasuries really easy. It's a really liquid market. What they had been doing was using those dollars to buy gold with.
Right.
Okay. So now all we got to think of is there's an opportunity cost here, which is they're going to flip back to treasuries and buy less gold. That's the whole premise as to why gold, in my view, is going to come off quite heavily here, because the second that geopolitical tension, specifically with China, eases, they're not going to be buying as much gold. They've been a huge buyer of gold.
Yeah.
The Chinese central bank. The Bank of England runs a vault for, you know, COMEX in the US, which is the commodities exchange. And they have to send physical gold whenever these warehouses out in the US need them. There was a massive delay. And I think it's because China was sucking up so much of the supply on the market.
Okay, so if it does come off, where do we go to? Now, the obvious answer there is there's quite a obvious around this 3,000 level. That's the next level of real support. underneath there. I know that everyone's going to love the whole support resistance situation. However, on a full daily chart, we often talk about things going up and to the right. You know, that's what gold's doing. If it comes off, it's got 150 moving averages to break through. The 100 being quite close to where we are at the moment. Mm-hmm. So I suppose a break of that 100 moving average opens up a test of 3,000, right?
Well, I like to think of this more as a story. So where did the story start from as your first support? Now, for me, that story started on the week leading into February the 27th, because Reuters reported on the thing that I mentioned with the Bank of England delays. Yeah. So that level is roughly 2,800.
Yeah.
For me, that would be support number one. Mm-hmm. Then what we do is we think, okay, well, where was the next big bit of buying pressure? And that's probably 2,500, where you can see those green daily candles that just went.
Yeah, there's a cluster, right?
Just
start of Feb.
Right in the middle of the chart.
Oh, okay, yeah.
There's your next one. And then there's a support under there. And then you've got another cluster sort of more towards the left of the chart, in the middle again. And that again, at the bottom of there, wherever the red, there's kind of a red green and then a small doji red candle.
Yeah, our eyes aren't. We're showing our eyes. Eyesight here.
That's where I'd say support 2 or 3 is. Yeah. So it's kind of that story there. Where are the buyers? Where have they been? And where's the most pain going to be inflicted?
I mean, let's strip this back and make it this simplistic point. Support and resistance is where are the buyers, where are the sellers, right? Yeah. So where are buyers going to come in again? Where does, if this falls, where does confidence return? Exactly. Basically, is support and resistance, right? So, and we talk about these moving averages. Now, I'm sure there is a 200 moving average somewhere in here. We're probably looking at this. I'd say we're probably breaking it at the moment. Are we? I don't know. It's not on there, but you know,
I think 200 would be a lot lower down. I reckon below the 100 daily.
Yeah, potentially. But so we've got a whole lot of resistance below that, support below that, right? Yep. That can see us turn around and can see it hold up. But if it falls off. There's another point around this is the normalization of monetary policy in the US and the economy not falling into recession and actually the economy remaining stable, you know, because we've seen a lot of talk of global recession and recession situation. Likelihood is that the US does not fall into recession, right? This is just headlines.
There's no real sign of it.
No, there's not. There's not at all. Jobs are pretty secure, and that's a key driver. We know inflation. Not even inflation headlines, but core PCE is stubbornly high, but not massively high.
Yeah,
you know, so there's not really a whole lot of view on that. Now, last week from where we are, the Fed held rates unchanged.
Yeah,
but surely pressure now will start to grow on Powell. You know, he's under pressure anyway, and Trump keeps calling him an idiot or whatever he keeps calling him. Not the only person he calls an idiot, but you know, but. Apart from Trump pressure, there will be economic pressure for rates to be cut.
Yeah, I think, you know, the key to the whole US economy is unemployment. But unemployment is not really going anywhere.
It's not budged. No.
So people keep talking about it, and this is why I love Twitter, because you see so many people just keep talking about the same stuff, predicting, while missing all of the moves up. Yeah. Brilliant, love it.
This is one of our picks from the start of the year.
Yeah.
So we had start of the year picks were Tesla, Rolls Royce, and
Walmart.
Yeah.
I think this will be a net benefit for Rolls Royce because they're basically going to be able to send their jet engines to Boeing in the US without tariffs.
Yeah.
And also, I think, and I'm desperately hoping they win the SMR contract with the UK government. Mm-hmm. Not sure when that's going to happen. I don't know why the UK government didn't just award them it straight away like anywhere else in the world would. But again, we're living in a banana republic, basically. But I think, you know, there's a pairs trade here where you could be long both Rolls-Royce, which you can see here, and also long Boeing.
And if we flip to the next one, we'll see Boeing,
Because one looks massively undervalued and one looks very overvalued. Now, I love companies like this. American institutions which are battered, which you know aren't going to go away.
Now, this has been battered, though. Boeing has been battered for, what, 5 years?
Ages.
Yeah.
You know?
Just absolutely smashed.
smashed.
Well, this goes back, 5 years, yeah.
And there is zero chance of them going away, which for me indicates, okay, well, it's got to return to a previous level. For me, it indicates a massive discount, a massive undervaluation.
Yeah.
And now if they're able to buy jet engines without that added cost, that's just going to add to their margins.
Yeah, yeah.
And so if you think about normal, even if it wasn't called Boeing, if you think about a normal stock, okay, this company can now make more margin than it could do last month. What should the price of the shares be?
Yeah, yeah. And it's already trading at I mean, we can't see too well, but it's already trading at its highest level for 18 months by the looks of it.
Yeah.
You know, so you take that to, this has got to be a weekly chart, take that to a daily chart, and this is going up and to the right.
There you go. So, you know, I think there's a way that you could look at being long both, or if you were to get smart, you could be short Rolls Royce, long Boeing on kind of a relative value play.
Yeah.
But I wouldn't get too smart with it. Maybe just pick one or the other.
Yeah.
It depends on how compelling you think.
But Rolls Royce, I mean, Rolls Royce is in our picks anyway. You know, it's doing well. It's been doing well. It's a good pick. You know, it's been a strong performer. But we'd definitely be sitting there going, well, Boeing gets. If you're picking it now, 6 months in, you know, or 5 months in.
There's Boeing and there's Airbus.
Yeah, yeah.
They're the two firms. It's a duopoly at the end of the day.
And they're all buying engines from Rolls Royce
exactly
at no tariff or
at a
small
discount.
tariff. Yeah.
There you go. So the shares must be trading at a discount.
Trading's easy, right?
Oh, it's simple. I don't know how people lose, to be fair.
Yeah. Anyway, on that, I think that's where we'll end up. So if you think we're talking rubbish, let us know. As we always say, let us know if you think we're talking rubbish. We could well be, but probably not.
We'll see.
Like, subscribe, do whatever it is you need to do, and we'll see you in a couple of weeks.